Hey, Tim.
Dorian?
Hi, Tim.
Hi, how are you doing?
Good. Okay, I got to get the correct thing up on the display. There you are. And I will let you see the class. So this is actually not the first time Tim has done this. So Tim, who is in California, can see us. Are you in your office, Tim?
I'm in my home office.
Okay. So Tim and I have seen each other in many places and become friendly. I'm not going to bother with news this time because I want to allow us the time to get started with Tim. So Tim, in addition to being very generous, is also somebody who I consider one of the rare experts in the space. He not only has experience in the traditional media business with some pretty high-profile and well-known businesses known for producing really important things like the Washington Post and the Los Angeles Times. He also has some serious chops, some serious experience in the realm that we've been focusing on, which is digital media management. And Tim and I have, as I said, been friendly. I visited him in his offices in Pasadena, which their Perfect Market was launched out of an incubator there called Idealab, which was founded in part by the wealthy investor in Idealab was from Tim was from.
So he had a string of hits. The one that's most relevant to you guys is he created a company called Overture, which was the first pay-per-click advertising business that he sold to Yahoo for some unbelievably large sum. Google then took the model and perfected it, and it's now about 50% of all advertising revenues online, maybe a little more.
And Overture, whose cookie-based tracking technologies are essentially embedded throughout the internet, and one of the key reasons that internet advertising is a multi-billion-dollar business today. So I'm not saying that Bill necessarily created all those billions, but some of the technology from Overture has really become omnipresent. So no pun intended. So anyway, so Tim is from. Can all you guys hear? Because the audio is a little low. But Tim is, as I say, the chief. Now he's the chief revenue officer of Perfect Market, which has grown from a startup incubated at Idealab. And the incubator at Idealab is in some, has in some ways informed the model for this class, the kind of model that we're using as our sort of hypothetical incubator here, and has now grown. The Perfect Market has now grown into a business that's gotten multiple rounds of capital, including tens of millions of dollars in venture capital, and has, is a serious advertising and otherwise revenue-generating business for the news industry. So, Tim, you were going to tell us a little bit. I'm sorry?
Business. Profitable business, no less.
Not only revenue-generating, but profitable.
Profitable. That's an important mark that we crossed. So our business is working with publishers of all kinds on the web. And today we work with about 450 different websites. I'm looking right now on my other screen here real quick for a couple of numbers so I get the most up-to-date ones. But we're running at this point across those publishers reaching at about 250 plus million uniques in the US and billions of page views today. So many of the major brand publishers whose sites you might visit, you would see some of the page experience is delivered and optimized by Perfect Market. So that would include New York Times, LA Times, NBC News, and a whole slew of others. we do that in a number of ways, but sort of at the core is a semantic technology that reads the page, reads the content, understands what that content is about in a thematic way, and then scores that content based on revenue potential or commercial interest and consumer interest. And then we do some interesting things with that data in terms of delivering up related stories or other things someone might be interested in reading, delivering up the most relevant or the most valuable ads, and we've begun to actually do some things with social media that I'll talk about in a little bit. But the scale has gotten quite big. We're delivering, really substantial revenues at this point to our newspaper and news publishers. Hopefully, helping them turn the content creation business into a real business that's sustainable over time. So, the big goal is trying to achieve that, actually.
So, yeah, I think we can get into the revenue model in a sec, and if you guys, when you guys have questions, I'll ask you to come up just so that you're close to the microphone, and that Tim can see you better. But we can get into sort of more specifics about the revenue models and the revenues in a sec. I mean, I think that your revenue model in many ways is the revenue model of a service like yours today for the news industry, at least, and in many cases for sort of any information-based business. You had, in a really fascinating way, described to me the transitions, pivots, life cycle, the things that Perfect Market was and has now become. It's been through almost 4 or 5 or 6 generations in just a few years since it's been launched.
Yeah. One of the things that I didn't really get that about the startup world when I started at Perfect Market. My background had always been in content marketing with big media companies. So Dorian mentioned the Washington Post, the LA Times, companies like that, building audience and sort of working in a big media organization. And when I first met the guys at Perfect Market, they actually asked me to come in and take a look at sort of what they were doing and what the technology was that they had, and how could it be most helpful to publishers. And what Perfect Market was doing at the time was very, very basic kind of arbitrage. And arbitrage in the web world always meant using AdSense or AdWords, Google AdWords, to buy traffic for 10 or 15 cents per click, and then delivering AdSense ads on the page that were worth 25 or 30 cents. Basically, looking for those opportunities where there was a mismatch driven by the content, where you could deliver more valuable ads than what the traffic would actually cost you. That was something that Google didn't particularly care for. It was taking advantage of sort of inefficiencies in their system. They wanted their system to become more efficient, and so they started to sort of ban that process, actually. And I took a look at that technology and thought immediately, well, why couldn't we just use this to move from this arbitrage model straight into an archives model? I mean, you're able to make money on the split between buying traffic and delivering ads into that traffic. What if you were to optimize those pages so that it presented itself well in a Google world, in a search world where archives are going to be most valuable? And that was the beginning, and we tested with a couple of sites, and it worked really well. And in fact, Dorian, I want to show a screenshot here.
Yeah, do I have to do something? I think you can just do it. I don't think I have to.
Yeah, no, I think I just have to sort of see here which.
I think you mouse over to the left, and the screen share is that green arrow thing.
Let's see if I get to the right screen. Yeah, this one will work. So can you see my screen?
Yeah.
All right. So I ran a couple of searches to show you guys this. So if you run a search today for desalination California, big water issues out here in California, you'll see a story from the LA Times from February 7th sort of pop up to the top. That's part of the LA Times archives that that Perfect Market manages and uses our technology on the back end. And when you go into that story, what you'll find is a slightly different, slightly modified display coming in from a search engine versus what you would get on the main site, where it's really focused on desalination, and you get these text ads that are actually really specific to flow measurement meters or water wastewater businesses, where the click-through rate ends up being very, very high in comparison with traditional ads, and where the click-out value is also high. So we're able to earn on this older content, and by older, it really is only sort of kicks into the archives at this point after, I think it's 2 weeks now. We've fiddled with what those numbers look like. And over time, but it really sort of works, drives to the top of the search results, and there's all kinds of things like that, examples like that that go back further in time, quite a bit further. In fact, if you are a student doing a paper on Ted Bundy's execution, you'll find a story from 1989 from the LA Times rising to the top of the search results, even ahead of Wikipedia entries for that kind of a search.
And so you guys have not only provided the technology that provides the ad, but you've also helped them search optimize the page?
Absolutely, yeah, particularly for the archives. And so there's a whole set of things that go into optimizing the page for search, but a lot of it comes down to this really simple concept of making sure that the signal about what the content is really, really clear. It's just sort of delivering a clarifying signal. And so Perfect Market went through its...
Tim, just to be clear, the signal to the search engine.
Yes. So and there's a number of ways you can do that. I mean, I could spend a full day just on talking about how you sort of give a strong content signal to a machine that's trying to read the page. But it comes down to get rid of anything or make invisible to the search engine anything that's not related to the main content. Make sure that you use good semantic language in your major tag areas, so title tag, headline tag, bold, and the like, and make sure that relevant links are pointing to that page, right? So Perfect Market was in this world of arbitrage that worked at a certain level, but that Google didn't particularly like, and Google was moving against companies that were doing arbitrage. I took a look at the technology and said we can apply it to archives, and so our business model switched almost overnight from arbitrage to an archives-based business. Then, as we sort of grew into that market, we moved into another sort of period where we've got the archives for all of these big guys up online. Business is going well, but we want faster growth, and so we pivot yet again from archives into the news cycle itself. And when we did that, we began delivering in real time some of the same kind of attributes that you see in the archives, but really designed not only for sort of the search part of the business, but the larger business. And so some of that is just sort of pure ad delivery. So, you know, if you go to NBC News and they've got a Bitcoin story today, you will see ads that we're delivering. They are less relevant. For some reason, they're delivering me Windows 8 driver download. I think Windows maybe has, or driver updates buying against my Windows 8 operating system at the moment, and willing to pay a pretty penny to reach people on Windows 8. But delivering those kind of ads on a site like Zacks, which is an investment site.
That's another point. I mean, you know, that's kind of completely corny the realm for people who are steeped in this, like you, Tim. But we, just to make the point to the students, I mean, I assume some of you know what Tim meant there, but you know, that for a publisher, and you guys are in the position of media executives in this course, that for a publisher is one of the calculations. For this particular ad on this particular page, what can I do, or on this particular page for every spot, what can I do to squeeze the most revenue? So what Tim is saying is, if the a perfect market ad was worth $5 per thousand page views, maybe Windows has said, well, we'll pay $6 or $8 for page views that match these attributes. So that's why if the publisher has a yield management system, or just they need to deliver a certain number of impressions for Windows, that's why the perfect market ad in that case might get bumped. That's essentially what you were saying?
It's not that it gets bumped. It's that the way in which we sort of meter the whole thing will find the highest value add that can be delivered at that point in time. And there are a bunch of systems out there that do it along different aspects or attributes. Some are cookie-based, driven by sort of user history. You'll see some that are focused on remarketing. So if you've ever gone to Amazon and looked at a product and then gone to another site and you see that pop up, what our system does is it actually looks at these various providers of ads and these various technologies now, and it sort of looks and sees, okay, what's the best dollar value for the best ad we can deliver today.
So you guys are providing the yield management in this case.
We do it so it gets a little more sophisticated than that, because yield management anymore is about managing auctions in these various exchanges or RTB platforms, right? Real-time bidding platforms and ad exchanges. And what we're able to provide is an understanding of the sort of where the floors should be for ads based on what we know about sort of commercial interest in the marketplace overall. And so by setting smart floors, you're able to actually sort of work these second price auctions in a more advantageous kind of way.
So you got cut out there. You cut out there for about 5 seconds. So what you're saying is you guys don't do the exchange, but you provide the idea of where the floor should be so that they can demand that of the exchange. Is that what you were saying?
Exactly. And because these are often second price auctions, knowing where the floor is set is really important, because you could have one person willing to pay a $50 CPM and one person willing to pay $1 CPM, and if the auction is just among those two people, the $50 CPM person gets it, but at $1 and a penny, or what right at that. That's sort of the nature of second price auctions. So you need to build in, as a publisher, sort of an intelligence that knows where that floor should be, so that you're able to take advantage of the auction and not let the auction be sort of a driver to the lowest price, because that's often what happens.
I mean, I'll just say to the class, we're going to touch on exchanges. Tim is getting into a level of understanding sort of how people are gaming exchanges in a debate in the industry that we're not going to bother with, because it gets very granular into how to manage exchanges. That's beyond that level of granularity is beyond the scope of this course. But that's what Tim is referring to. How exchanges are trying to encourage sort of honesty in the market, and how publishers are them trying to use their own methodologies to game that, and marketers and publishers are each trying to game from their own side.
But it does sound exactly like what eBay does. You can put in the maximum that you would bid, but but when the bid is ultimately over, you pay just over what the next lowest bidder bid, and the seller can set a reserve or floor price that they will not sell below.
I'll trust you on that.
That's true.
Yes, but that's right. It's a pretty typical auction kind of approach. And so we move then from sort of this idea of dealing with arbitrage and archives that's pure semantics into a news cycle that is real-time, both in terms of the kind of content machinations and the content, sort of the display of related links. We're applying a similar kind of model to the related stories that appear on a page. In the news cycle, if I look at The Economist, so if I go to an article in The Economist today, these things, these links at the bottom, and you'll see ones like this all over the web, from our perspective, get driven by almost an auction-like or A/B testing kind of system that is self-learning, learns what's going to capture the interest of Economist readers. We look at reader attributes, all designed to sort of get people to read one more story. So same technology applied to the news cycle and in news that's breaking as it's kind of happening. And that moved us into sort of the third pivot point, which was moving from a news cycle driven product to one that was really driving to improve engagement. So additional visits per visitor, additional page views per visit. And so we started getting sort of more sophisticated with our algorithms on these. We've been able to show, 10, 15, 20% increase in the next click, next story kind of things, just by picking better stories, and having these models that are learning what it is that the audience for any given publisher is interested in at the time, driving more related stuff as well. Some of those aspects, all of which, of course, drive more page views for the publisher and drive more revenue off of the ads for the publisher. And so as we build the publisher's business with increased engagement, revenues for the publisher and for Perfect Market increase. And that sort of has gone really well. We're sort of that product continues to evolve and is getting better all the time. The newest sort of pivot that we've been in, or shift in the business, has been from engagement into one that we're experimenting with now, which is really social media. And what we decided to do, and this is this site now that you should be seeing on the screen is KTLA. What we started to think about is, if we were to take our semantic technology and the ability to sort of understand the relationships between different pieces of content, or more abstractly, different pieces of information, and point that information at readers' social profiles, would we be able to sort of help improve and help drive a more sharing kind of experience? And if you go into like KTLA, this is a story about today's visit or upcoming visit from the Dalai Lama in LA. And down at the bottom of this page, I hope you can see this okay, I'm kind of logged in with my Facebook account into KTLA, and I've read this story, and we're now suggesting friends of mine who might also like this story. And so what we've done is created a mechanism where direct shares out to the people that fit in your social graph begin to sort of play a role in.
Are you able to scroll up a little bit, Tim?
Yeah, I don't know which part of the screen you're seeing.
Right now we can see. Yeah, I'm sorry. We can see it now.
It sort of blends in a little bit. It's at the bottom of the page at the moment as we test. But so what we've done is we've read the page. We say, oh, this page is about the Dalai Lama, and then the technology goes and it looks at my friends in Facebook and it says, oh, Lucy likes the Dalai Lama. Why don't you share this story with her? I can then send Lucy a message. Hopefully I spelled Dalai Lama right. And if I share this out, Lucy hasn't heard from me in a while. She'll be surprised when she gets that. But that's going to now, because it's a direct share to Lucy, it sort of rises higher in the Facebook algorithm, which does two things. One is she's going to see that in her timeline or on her wall. And second is that this story now gets additional sort of credit. This page gets additional credit from Facebook. So as they see this in their news feed and their news algorithm is doing its work, it's actually likely to have more sort of juice in trending and get more exposure as more people like the page, favorite the page, whatever, which is sort of a weaker signal. The little pluses and likes. So what we've seen with this is that even small numbers of direct shares from one individual to another drives considerably more sort of rank in social media. Traffic from social sources goes up. Engagement with the content in terms of sharing and discussing goes up, and all kinds of good things happen, including more high-priced ads getting delivered. And that sort of is kind of where we're at now. We're also experimenting with a couple of other ways that are sort of the generation after this. So as you think about these pivots, you're always sort of thinking, okay, what's a little bit further down the road? And so now we're trying to sort of take that information that we get from the sharing, from the traffic, from the semantics, and what we know about what's being talked about across the web, and beginning to sort of aggregate it or re-aggregate it in interesting ways. And this is really, really, really early stage stuff. But we're trying to sort of surface stories, automate the creation of timelines around events, where you can begin to see how a story unfolds over the course of time. I don't know why Sean Penn and Charlize Theron dating are in there, but you begin to get a sense of sort of what's possible by pointing the same kind of technology in different and unique ways.
So Tim, I'm not sure. You know, I that Charlize Theron and whoever it was are dating, but Sean Penn. I did know that Piers Morgan was kicked out. That little glitch aside, what is it that you've done there? I'm not sure I understood what. So
we're doing three things.
I'm sorry. What is Be Worldly? I'm not familiar with that site. I don't know.
It's a domain that we own. We own a ton of domains, and we're sort of experimenting on that domain. So on that domain, what we're doing is we're looking at traffic patterns for articles that are published now across a wide range of news sites. We're looking at the social sharing patterns of those articles. And we're surfacing things that are going to be of interest to an individual based on their patterns of behavior and social profiles across news sites, to encourage sharing, to sort of have sort of better aggregation of content based on some of these signals. Today, and it's interesting because we're constantly in a race. Today, Facebook announced a change to how they're doing news in Facebook, driven by topics that you're interested in. So, you know, that maybe Facebook is going to be doing the exact same thing, and if I go to Facebook, you know, maybe the Piers Morgan story and the Solar City story pop up to the top from Facebook. We think because we're sitting on and working with all of these publishers that we've got a leg up on understanding that. But Facebook clearly has access to a whole bunch of social data that nobody else can see. So
are you
very, very experimental.
So we're also not quite into the awareness part of the course yet. You know, the course goes content value chain, content creation, management, distribution, awareness, and monetization. And sorry, I just realized I'm showing you my hand.
That's okay.
What's so? Are you getting those signals from the Facebook Open Graph? First of all, are you doing this only for Facebook? These kinds of things you were talking about just now,
Yes.
the encouraging of social sharing. And are you doing it only for Facebook? And where are you getting these signals from?
So at the moment we are doing it only for Facebook. They have the most robust API for accessing this kind of data. So at the moment it's Facebook only. I would love to have Twitter. I'd love to have Google+. I'd love to have LinkedIn. Those, you know, we'll get to those as data is available. The signals are being generated out of Facebook, but also out of behavior and what we see on the stories themselves. So by being on all of these page views and all of these articles, we can actually see, you know, where traffic is coming from, what happens next in the click stream, and we can see it aggregated across a whole bunch of places. And so it's sort of taking that and taking advantage of that and using that to improve the content experience to make sure that the most relevant or most interesting piece of content you can read right now is part of what we're working towards.
I find it interesting. I mean, just to sidetrack for just a sec, that you know, Upworthy and BuzzFeed lately have gotten a little bit of sort of negative press for quote unquote gaming the gaming Facebook. You know, and in a sense, that's what you're doing. But I don't know that. I mean, to me, this is not this. Yes, this is feeding the algorithm, but it's not illegitimate because if it does what it should, it's actually a win-win because you're using the algorithm to send signals about what people actually like, offering that to them. If they like it, they will share it. That will send signals, and it becomes a positive reinforcement. So it, you know, yes, it's gaming, I guess, but it's like I say, it's a plus sum, not a negative or a minus.
Yeah, and I would say that it's not gaming. What I did on that Dalai Lama story is I shared it with a friend of mine who is interested in Dalai Lama, and in fact, I had no idea she was interested in Dalai Lama. Now, if I'd gone to her Facebook and read it myself, I would know, but I didn't. She and I had never talked about Dalai Lama. When she and I talk, it's always been about advertising, about audience growth, about marketing, and so that's sort of a cool thing that from sort of by giving the publisher permission to sort of take a look at this and using it in a way that keeps me still in control. You know, the opposite of this is kind of what people tried doing with some of these what did they call it? Frictionless sharing, where everything I read would appear to everybody who I knew. That's not what this is, right? This is sort of the opposite of that. And it's a far stretch to say I think that this is gaming. What this is doing is trying to use the best information that we have, the best information I'm willing to let a publisher take a look at to improve the experience just a little bit.
So Facebook is willing to let you take a look at. Is this through the Facebook? You mentioned the Facebook API. Is this through the Facebook Open Graph, or?
This is So this is the standard Facebook API. So You have to, when you click the sign in with Facebook and it gives you a little list of permissions that you're agreeing to, it's all part of that and part of that permissioning process, and sort of fits into that world of privacy and sort of terms of use.
And from the publisher
Framework.
perspective, one of the things that we've touched on APIs a little, and we will touch on them more. And one of the things that I will talk about in the class is that APIs can be a publisher tool, even a center for revenue production. Do you have to pay Facebook for access to this API?
There are different levels of access depending on how much data you're using. So you're allowed to have a certain number of calls over a certain period of time without paying, and then as you begin to use more bandwidth and more resources, there's a price attached to it.
So, and you're saying that's the standard one for all publishers?
That's pretty common. Google Maps has an API. It's a similar kind of thing. Google Analytics, the same kind of thing. You get free access on Google Analytics until you hit 20 million hits or requests per month, and then you move into a world where there's fees.
And on the other side, there are publishers who will share their API up to a certain point as well, like The Guardian or
Yep.
I don't know the terms of the New York Times, but I presume it's similar with them.
Yeah. There was a big move several years ago to sort of these open access kinds of approaches, whether it's with RSS feeds or access to other forms of data. More and more publishers are giving access in a programmatic way to content, to data, that then people can use in creative and interesting ways. All kinds of cool stuff ends up coming about when you make that stuff accessible.
So to me, you've just painted a fascinating picture. I mean, you guys, if you have any questions, just raise your hand, or even just come up. But to me, you've presented a fascinating. It doesn't spook you that you can't see me, does it?
No, it's fine, Dorian.
You've presented a fascinating. I mean, how long has Perfect Market been in existence? I mean, less than a decade.
More than 5 years.
Yeah, so about maybe 6 years, right?
Yeah.
So I mean, and here you've talked about. I mean, I was taking notes. You've kind of been through 5 iterations already.
Yeah.
So that speaks to how nimble you have to be and how willing to continually invent and reinvent, and it's just a constant. I mean, today I was complaining to somebody that I felt like I was on a hamster wheel, but that's kind of a negative way of putting it. Sometimes I feel that it's a hamster wheel, but you just have to be constantly willing to invent and reinvent and understand that this is not in stasis and it's not a stable situation, and what works today has to evolve tomorrow.
Yeah, the pace of change is astounding, and again, sort of coming from a world where my entire career was with big media organizations, it took a little getting used to. It's hard to imagine being off of that pace now. You get sort of addicted to the highs, and in some ways the lows. I mean, it really can swing dramatically day to day. The pace is incredible. The amount of focus you have to bring to your work is pretty cool.
Well, I was having lunch. I mean, I wonder if you confront issues still within publishers. I was having lunch today with a top executive at a very well-known major news organization who was saying that there was a time, even still within his organization, there's a cultural transformation because people are still remembering days when they would make the product. It's a print product. They would make the product. If they redesigned, the redesign was done and it was set. And then the assumption was, we're not going to have to redo this for another, long time. I mean, 18 months would be quick. I mean, maybe it was going to be even 3 years or 5 years or 10 years. It was just set, and there's still some resistance to this transformation, this constant, renewal and reinventing, and so I wonder if you confront that sort of culturally within the, because you're dealing with some major, long time, old, well-established brands.
Yeah, yeah. All the time, everybody's still wrestling with the implications of this sort of pace. I think that ultimately it is a part of it is a generational change. So it's going to continue to take more time. Part of it is a function of size and sort of the competition between old business models and the way they've worked and new ones, which in many cases have yet to prove themselves, right? So with a major broadcast news or with major print news, those businesses have fallen on hard times, but fallen on hard times in many cases means that they're not nearly as profitable as they once were, right? The ones that are well run, the print operation still throws off a fair amount of cash. Ad pages have gone down. You can see where it's headed, but the sort of change culturally that those businesses had to go through, and now they really have to get there fast, was one of managing a business. So take a major market metro daily. That major market metro daily, call it 15 years ago, had almost a natural monopoly position for print news first. Most major markets only have a single paper. The ads were really effective. About half of the revenue, about a third of the revenue was from classified ads for cars, for jobs, and the like, right? And maybe half of the margin of that paper was in those classified ads. And the smart ones moved aggressively and started businesses like Cars.com, which is run by a group called Classified Ventures. It's actually owned by a bunch of these major news organizations. But Cars.com sort of is capturing business now, but the car classifieds are tiny in a newspaper. If you pick up a Saturday paper, you'll get a few. You pick up a weekday paper, you won't see any. And so half of your margin goes away with the print classifieds, half of it. So suddenly, your margin's been cut in half. Your expectations of your owners, your stockholders, the way you manage the business had always been historically managing around the margins, looking for little improvements in costs, little improvements in revenue, and they're not used to growing aggressively at rates that you see online. So you look at the rate of growth in ad revenue that Google has had, or even look at Facebook. I mean, Facebook 3 years ago, did they have any revenues? Probably not. And now they have very, very substantial revenue streams. It requires an entirely different approach to management. And that's what these media organizations have a hard time getting their heads around, because they're trying to protect a brand that still has meaning in the world. And they're trying to manage, in many cases, a legacy business that still has some life left in it, and yet they're trying to compete with companies whose sole sort of mantra is grow really big, really fast, and that's a hard challenge.
So what's the perfect market business model?
Our business model is all ad-based. So all of those products that I showed you around increasing engagement and more social activity and more search traffic, all of that gets paid for by a split of the ads that we deliver. And so our interests are aligned. We have a strong interest in seeing traffic and audiences grow on these publishers. We have a strong interest in getting the highest rates we possibly can. And so the publisher gets a check from us every month.
Which you know, are you at liberty to say what the split is, Tim?
No.
But I know that, I know that this is also a transition in the industry, and you know, I've dealt with a few newspapers on this level, not tons, but you know that basically for a new vendor, especially in digital, to get traction with a media company today, you basically, you know, it's really hard as a vendor to come in with sort of the old enterprise model and say, you know, pay me $150,000 for an install and $1,500 per seat, you know, for this software as a service or whatever, and then maybe we'll talk about revenue share after that. It's pretty much from the start. I mean, if there's an install price, it's a very low install price, which is basically just sort of offsetting a little bit of the risk to say, I want to make sure you have some risk too, and I am going to do some technology work for you, so show that you have some skin in the game. But then we will actually share revenue with you, and immediately as soon as you earn enough revenue to offset those costs, we'll return it to you, and then the rev share starts. So it goes from publisher pays money to get technology, and publisher can use the technology however it wants, good luck, to the model that you describe. Publisher and we are partners, and our incentives are aligned. The more money I help you, publisher, make, the more money I make. So if I take 30%, then you get 70%, but that's a percentage. If the pie grows, we both make more. So you know, in your case, you're saying, well, yeah, we could say we're just in the ad serving business, and we're going to do that, and just help you serve ads that are worth more in your pages. But you said, no, wait a sec, you know, we're going to help you also increase what I call in this class awareness. We're going to help increase visibility and therefore click-through, which will lead to more page views, which leads for more ads on these optimized pages. So it's a win for all. So in a sense, you're doing things that you don't have to do, but it ultimately is a win for you and the publisher. And that's kind of the structure that I observe working these days, at least getting traction with media companies.
Exactly. And that requires a different sort of way of thinking on the media company side as well, because you know we are most successful when we really truly are in a kind of partnership. The minute you start getting treated as a vendor, you know, things don't develop as fast. Things sort of the relationship isn't as productive, nor as profitable for either one of us. So you know, and we do a lot of things to try and encourage that kind of partnership. Part of that is we have a small, almost boutique consulting business that is around SEO and audience development, where we'll go in and do training in the newsroom, train copy editors, work with tech staffs around best practices for making sure your content is as visible as possible in the search engines, in social media. How do you build followers, sort of at the level of the newsroom, all of which sort of gets us deeper in with the publisher. It helps us understand sort of the environment, what the major issues are, and publishers benefit greatly from that as well.
And do you charge separately for that consulting service?
We do.
So how do you balance the issue of, you know, you're helping? This is no longer a world in which you know, geography can be limited. So the LA Times is in competition with the New York Times.
Yep.
So how do you balance that, where, you know, you have to optimize for both of them, but you know, one's got it just by virtue of the layout, one's got to be on top of the other in certain results or sharing or whatever.
So the whole competitive thing is kind of an interesting one. my advice to publishers like the examples you give, who are not, by the way, in this consulting. We don't do the two of those at the moment. But my advice to both of them would be similar at a high level and very different at a detailed, specific level. In part because each of them are very different publications. They each have different strengths. They each have different voices, and I take it down to, the level of what is it that you bring uniquely to your content. What is the unique voice? What is the unique focus? The LA Times will focus on movies in a very different way than the New York Times will focus on movies. Doesn't mean that they don't both cover movies in the movie industry in some fashion, but the take is very, very different. And if everything was optimized perfectly, what happens is the content itself becomes the distinguishing factor, and that's sort of a world that I think is important to get to, where the uniqueness of each piece of content and the unique interests of each reader are what sort of drives what gets surfaced and what gets visible to everybody.
So I mean, this is kind of in line with a trend in the industry recently, where we've seen the separation. I think there was kind of a trend up until maybe 18 months ago, where the kind of zeitgeist was, how much content can we throw up, how cheaply, and can we just get the cost of production low enough that we can create a margin by serving ads on it, whatever it is, as long as there's volume, whether it's user-generated or machine-generated or whatever. And, I mean, that still is a business model for some people. But what you're saying, yeah, go ahead, I'm sorry.
No, that's exactly what I'm saying, that business model is not going to build you a sustainable business, a valuable brand, or build ultimately loyal readership. That you have to have sort of a unique proposition. You have to treat, I think, your content and the focus of your content and the voice of your content is critical. By extension of that, I think the way in which you choose writers and the way in which you promote writers also fits into that kind of a world. I think that as some of these signals develop, and as search becomes more personalized, as social becomes more prominent, the characteristics of individual authors become important as well. So it's no longer just the LA Times. It's Jonathan Gold, who writes food for the LA Times, and the way his brand sort of interacts with the publisher brand becomes part of the business going forward.
I'm sure publishers struggle with that too. Greg, you had a question. Why don't you step up so Tim can?
Yeah. So my question is this: just on a basic nuts and bolts level, does your company approach publishers that you seek to do business with, or do publishers come to your website and say, "Can you help me optimize my page in terms of revenue?"
So it happens a little bit of both ways. We've had publishers, and this typically happens in markets other than the U.S. Publishers who've come to us and said, we've heard about you, we've talked to somebody, they recommended that we give you a call, can we sit down and talk? But we also go out and actively sell to publishers. So it's conferences, it's meetings, it's all of those connections that you have. Yeah.
Are you at all concerned that a lot of your client base is, as you say, having trouble?
So our client base has diversified quite a bit from where we started. So when we started with this, it was heavily focused on newspapers. for two reasons. One is that the archives model, newspapers had electronic copies of content going back to pre-web days, which made that sort of a natural fit. Also, that was just kind of where my background and connections were. But since we've expanded out and we're working with broadcast news, cable news, we're working with magazines, we're working with financial news sites, we work with a ton of online-only publishers in a whole range of vertical niches. So I'm less concerned about that now.
Well, that's good. Which are there any of the online-only ones we might have heard of?
Well, I think Zax is online only. You'd have heard of them. Let's see, what's another good one that I can talk about? So I'm working with one called The Wrap. The Wrap is a movie industry, right? We work with The Wrap. Let's see, Investors Business Daily has a print publication, but their model is very different. Yeah, so those are some examples that I can talk about.
Mm-hmm. What are your revenues, Tim, or is that some? Are you able to give us any ballpark or anything like that?
We're a privately held company, which gives us a little bit of freedom to not have to talk about that.
And we can't talk about the possibility of a liquidity event or anything like that.
No.
And how the lovely picture we saw at the beginning of you and your family on the beach will become a more permanent picture of you on the beach sometime.
Yeah, that'd be nice. That was an East Coast beach, by the way. Not I haven't taken the family picture on the West Coast beaches.
All right. Does anyone else have any more questions for Tim? Why don't you come up? And I'm horrible with names. Brian.
It's always a little creepy standing in front of these things.
Right.
Hey, how's it going? So I guess my question is, you talked. There you go. We talked about how your business model has changed a little bit over time because the industry's changed. Yep. I've seen with a lot of startups that it's hard growing over time. You have growing pains. Things have to be scalable, both in terms of the technology, and one company wants something different on a sale than another company wants. So what are some of the issues you've had with that? And from a technology standpoint, have there been any growing pains in terms of scaling out for more customers, et cetera?
So we've had the very, very, very good fortune of having an absolutely stellar technical team. This is a team of folks led by our head of engineering, a woman named Ning Ning Yu, who have worked together at a number of other startups, and they are rock solid good. I mean, you've got to have incredible discipline and incredible talent on the technical side to be able to pull this kind of stuff off. So we have not had the kind of technology growing pains or scalability pains that other startups that you may have seen or know of have faced. This thing was built from the beginning in a way that was really, really smart, and we've continued to adapt it as needed on the product side as the pivots need to happen. The hardest thing, of course, is being able to balance the amount of effort that you put into R&D versus things that are sort of sitting right in front of you, and being able to maintain a level of focus that doesn't distract that team in particular. So that takes a lot of give and take and really good communication, especially between sales and engineering, or sales and product, including making sure that the product team is aware of sales conversations that are going on, to help come up with ways that will let us solve specific customer needs without requiring a lot of modification or adjustment to the underlying technology. It's a hard thing to do, and it's easy, would be very easy for a startup to fail if they don't get that right.
Anyone else have a question? Yeah. And
Steve.
Sorry. I apologize.
It's fine. Hi, Tim.
Hi, Steve.
Hi. Nice to meet you. Thank you again for visiting our class. We appreciate it. So we've even some of our readings, the class readings that Dorian has integrated into our curriculum, have to do with the elimination of SEO and reconciling that ultimately predictive analytics will reign over. I was wondering how Perfect Market intends to sort of cope with that, and if it is going to encounter any growing pains in doing so. Thank you.
Yep. So,
And just for the record, Tim, this is not like I'm taking some sort of doctrinaire position, but I do assign various readings, and some readings have said that.
yeah, no, I mean, there have been people who have written about the death of SEO for the last 7 or 8 years, and I think SEO only started about 10 years ago. So, I'm used to hearing that. SEO has changed. Google has changed. Google has changed more in the last year than they did in all the 10 years prior to it, I believe. And absolutely, what is called SEO today is going to change and evolve. I've got some real specific thoughts on how it's going to change, but I'm not worried about it going away. That it will change is undoubtedly true. That it goes away, I think there's not a chance. There's not a chance. You know, what was the last, Steve? What was the last search that you did on Google?
I'd have to look, but let's see. I think it actually had to do with New Rochelle right-of-way. I wanted to find out what the right-of-way laws were in my local city.
Yep. And did you do anything immediately prior to that that would have encouraged Google or some company to know that, in fact, you were going to search it then and there?
Right. That was out of the blue. I mean,
it was out of the blue.
There may have been geographic data that I had done, you know, searching close to home, you know, Thai restaurants nearby or something like that. However, like you said, it was out of the blue.
Or if you had an Android phone with location on.
Right, which I do.
So that right there, that was a signal that you may not have intended to send, but you did just by virtue of being physically in New Rochelle with your phone.
Right.
But I think if you just think about, as you're searching for the next couple of days, if you spend time thinking about the searches you're doing and think about, you know, could a machine have predicted that at this moment in time I would be searching for X, you'll find that sometimes the answer is yes. If in fact coming into this class, or you came in and you sat down at the class and you typed in my name because I was going to be speaking, and you had my name on your calendar, then in fact there was the possibility of sort of interpreting that search there. But most of the searches don't have the attributes for that level of prediction. I don't believe. So search is still going to be a key way of navigating.
And also, you know, one way to answer that question, Tim, in my opinion, is to say, you know, bring it on. I mean, it's like, okay, if Google incorporates more social signals, if they incorporate more sort of social signals, incorporate more predictive modeling, which they are in both, you know, then you'll try to keep up with their algorithm and use that to better elevate whatever needs to be elevated. So it's
That's
not
right.
like, I mean, SEO doesn't just mean the kind of tagging and headline writing and, you know, HTML that you were talking about earlier. It can incorporate all these other elements too. So it's not like with the acumen that your guys have, the tech acumen and understanding that your guys have, sort of larger managerial and executive understanding. It's not like if Google incorporates predictive analytics and social signals that you'll therefore be flummoxed and won't know what to do. If you evolve, you will be able to incorporate whatever the next iterations are as well. Because no matter what, there have to be signals, and that has to be systematized in some way.
Yes, exactly.
So can I have $1? What else? Tim, I can't remember. I think you treated me to lunch last time, so maybe I got to treat you. Anybody else have a question for Tim? I mean, your questions have been great. Tim, just to show you, I mean, we have a diversity in the class of people who are in the movie business, the film business, the advertising business, technology businesses, finance, and everybody really brings a different expertise to the class. Almost everybody is a working professional, and I think everybody either is or has been. A couple of people are full-time students, but so we've got a real array here. But I think everybody's benefited from the things you've said, and I think everything has been understandable, right? There's nothing that's completely over the heads or anything like that. So before we say goodnight, is there anything else anybody wants to ask? Or all right, well, thank you so much. Thank you very much, Tim. Appreciate it.
Thanks, guys.
I'll be in touch as well.
Okay.
Bye-bye.